Enthusiasm about Greece's election results wanes as Spain's borrowing costs surge over 7%, reigniting worries about the financial crisis in the Eurozone. U.S. futures are nearly unchanged ahead of the FOMC meeting's outcome tomorrow. Earnings out today from Barnes & Noble and FedEx. I'm Brittany Umar, and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call. So the market surprisingly gapped down at the open yesterday, but the bulls remained in control, ended up being a good day for traders. What do you make of the action?
I thought it was a great setup. A lot of people came in disappointed, those that were long, that wanted the immediate gratification of selling the up open, as well as those who wanted to be short, wanted to be able to short into a bigger level. So yesterday we came in, futures were down 6-7 handles. IBD put us back in a confirmed rally on Friday based on the technical action, not the headlines. So yesterday there was a lot of opportunity as a lot of the leading quality stocks all went up anywhere from 3 points to 20 points, and you actually were able to enter them during the market hours versus worrying about, buying some type of big gap up.
So where are our key levels of resistance and support when you take a look at the S&P now?
Well, if you remember, we started talking about the inverted head and shoulders pattern, which was a forward-looking pattern, which was a thesis where you could see commitment to a move without, again, obsessing over the headlines and just looking at the levels. And if you look here at the chart of the S&P, you will see that we had a lot of defined levels here. If you remember the head and shoulders top way back when, which gave us our measured move all the way down to the lows, then we broke below the 200-day and reclaimed it, so it posed more of a trap versus meaningful. And then you had that move off the lows, and we started talking about if we could hold 1306, 1309 and go sideways and show commitment to this move off the lows, what that would do is then give us a potential right shoulder in this inverted head and shoulders pattern. Then late last week, you saw on Thursday, we nudged above the neckline, which was around 1330-ish, and now we've had some nice follow through. Yesterday, we paused at the 50-day moving average. Today, we probably reclaim it. I think the first target of this measured move, which could come into Fed day tomorrow, is right around 1358. At this point, hard to initiate new longs here after missing a few of your entries, but it's also hard to fight it. I would look at more quality stocks for entries versus the indices.
Okay, and just a quick note, because you were talking about how we saw strength out of high beta tech yesterday, lots of areas. It seems as though with Spanish yields where they are right now that there might be too much risk involved with holding stocks, but if you are holding some, they are paying off.
There's a lot of strength in a lot of places. You even have stocks that are making historic highs, which we'll get into later. And there's always something to worry about. And if you don't like the way the world table is being set, because we are seeing a slowdown, we are going to be having complicated headlines, doesn't mean you need to be all in. It means you could just test the waters, being a tier one, being something that makes you comfortable, because if you're just avoiding the market and say, oh, I can't read the newspaper, stocks are getting me or whatnot, then you actually probably shouldn't be in the market. But if you educate yourself, you will see that you have stocks like Dunkin' Donuts at historic highs, stocks like eBay breaking out, stocks in high beta, which I guess we'll go over right now as we start.
Let's talk about high beta, because the sector did show a lot of relative strength yesterday. Let's start with Apple. After a few sessions of lagging, had a lot of light volume in recent sessions, it came back yesterday. So can we continue to turn to Apple as the market's leader?
Well, yesterday was very good. It finally, flexed some of that muscle that Apple usually does. And we talk how, as a macro investment, Apple should be in your portfolio if you're an investor in the market. As a trader, there are times to be bigger, lighter, sometimes short. And if you look at it right now, yesterday was a great day for Apple. Here's when it held that 100-day. Here's when it held higher. We talked about event day. Remember when it broke through and failed? The market wasn't ready for it, and it had to work off that condition. Well, it did. And yesterday on my price point sheet, we listed 574.62 above the 50-day at, what was that, 577. It closed strong. I think next level needs to get above, where some traders will add, is around 588.50, and then above there, you have really nothing until it fills this gap all the way to about 600. And then, if the market wants to continue going, the stock should be at new highs at some point this year.
And yesterday, Amazon had nice follow through and closed up. So where's the next resistance level for Amazon, and what could help it break above it?
Well, yesterday we had another pivot. We talked about earnings gaps, and I know that it's been dribbling lower, and it's lulled some people to sleep. But all in all, since earnings, it held the gap, showed a lot of bullish composure. If you look at the chart here, you will see, this was the gap up on earnings, and it had to consolidate those huge gains. It wound up holding a big majority of that earnings gap, held above the 200 and the 100, and held the 50-day showing relative strength. So yesterday, again, on the price point sheet, this was your tactical level to buy, which it could have because we didn't have a gap up, 219.33, and then there you go, 3 nice points. So now we're coming into old resistance. So it'll be interesting to see if it could break out to new highs and be one of those first high beta names, to do that, because it would just be it'll be healthy and it'll provide some power.
Now, Baidu reclaimed its 20-day yesterday and built on the gain that we saw from Friday. So could we see some follow through to the upside?
Baidu is a different story. I think Baidu and Google have both been on the weaker side, but if you're not involved and you're not caught, there could be a trade there. And right now I see a rounding type pattern. I had perked up yesterday. There is some talk that the stimulus is going to work a little bit in China, so maybe it's good for a trade. Right now, not an investment. So if you look here at the chart, you will see that Baidu's been somewhat trapped in a down move ever since it put the high in all the way back here in August. This was the last time, it tried to rally and failed. It's below all the moving averages, but, it held midterm support here. It held above the 110. If this market wants to continue, a lot of people are used to going to Baidu. So for me, I would say as a short-term entry, if it could break above this 122 area, you might see at least a move to test this little peak here, which comes in around 124.80. And then it wouldn't even surprise me if it tries to test these moving averages into the 130 area. So from here to here, there could be some cash flow.
All right, and Google still trading below all key moving averages. Does the stock just need even more time before we can figure out its direction?
I think this is more like in the Baidu camp. You have the stronger ones that have rewarded investors for staying the course, that provided less pain, and then the ones that have acted faulty, and Google's acted faulty ever since it missed earnings twice and then broke below the 200-day. So if you look now at the chart, you will see that it was grasping to hold this intermediate support, which it did. It poked a little bit below it, and then yesterday woke up just a bit. As you could see, when most people got out of it, it was when it closed below this 597 area. So sometimes it comes up and retests it. So if you're an active trader and you saw it break this pivot, some guys bought it for a negative to positive move yesterday. You want to take a closer look. If it starts trading through 574, you have an area around 581, but then there's a wall of resistance that comes in at 596, 597. It's probably going to need earnings that'll be out in the next month to power through then, but between now and then, there could be some cash flow activity.
All right, well, coming up, we're going to dive into the trenches with social media stocks, so stay with us right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Social media stocks, another strong sector yesterday. Let's turn to Facebook first. The stock has gained almost 25% since June 6th when you called a red dog reversal. Where's the next level of resistance for Facebook?
I think we hit that yesterday. So it goes to show you that even though it was an obsession in the media, it was a faulty new issue, whether it was Morgan Stanley, whether it was NASDAQ, whether it was the media that overhyped it, you know what, we can't control that. We can only control how we approach it tactically. And when it opened up, it was a sale. It was overvalued from a $100 billion market cap, from 38 or even higher, 42 all the way down. Finally, it started to base a little bit. Here's where it tried a little bit of a reversal pattern, wasn't ready yet, continued lower. Then here was that red dog reversal you just named. If you use this strategy and you bought when it went below and reclaimed this 25.75, you had yourself a really nice percentage gain. For me, it was a little tough. I tried it there, but I didn't like the market, so I said I'll wait. Well, if you waited, this was the last time we talked about it, right when it closed above 28.10. Now look at this move right into resistance here around 32. So I think at this point, this was the easy part of the move, the reflex part of the move. I would like to see it hold higher, go sideways, and then if it goes sideways, I'll be interested for another move above 32.08. But for right now, I think you just had your nice move, above 28.10 from the red dog reversal. I would not chase it right here, and if it goes higher, you know what? At least it'll go higher without me because I don't chase stocks that are, move like that right off the lows.
Then there's LinkedIn, putting in higher lows, reclaiming all key moving averages. Will this uptrend momentum hold?
This one was one of the go-to stocks that we mentioned way back, about a month, right as actually Facebook was going public. And then with the Facebook carnage and with the overhype, it got beat up. But we tried to say that LinkedIn, even though it has a high PE, it's a lot different than Facebook. I think on the same metrics, it's like 1/10 the valuation, and there's so many less shares out there. So push comes to shove, if you look at the chart here, you will see that after everything's all said and done, you take a macro look since it came public, and it's doing all right. This was the first day. It's been very rangy. If you remember when Goldman Sachs upgraded it right here, it actually broke that level recently and then reclaimed it quickly, which showed some interest in power. At this point, it's already had a really big bounce, and it reclaimed the 50-day. So this is when you had somewhat of a red dog reversal right here. That was more of your entry, or when it powered through this old support that should have been resistance, but it wasn't. So at this point, I would say it would be very healthy if it could hold above the 50-day, above 102, go sideways, and then maybe we see another entry. But at this point, I don't think you chase it here. It could use a rest because from 90 to about 105, that's a nice percentage move. So don't chase this move, because if we do get some type of pull in there, you'll probably be chasing the move and hitting the pull in when you should be buying it.
All right. Well, on the other hand, then there's Zynga, who has been weak, actually. So what are the key levels right now here?
Well, this Zynga was a debacle. Every sales trader out there had a thesis that it had to be $20 when Facebook came in, and traders broke their rules, including me. I lost more money than I should have because I was, being told this should happen, and the market didn't confirm it. So PS, it went down to $5. Every single investment banking firm is now getting behind it. I think at this point, you could be long it. We talked about buying it around 520. You look at the chart here, you will see that it finally had some kind of capitulation type move near the lows. You now had a 2-day move up, which it's had a few times. Here you had a 2-day up move, and then it was sold. Here you had a 2-day up move, it was sold. This time maybe it's different. If it's different, it should hold this 560. The longer it holds 560, if you miss this, the better the probability that it could break this small little descending trend line. And I do think at some point this year, if you want to hold it, it gets back to the mid 7s. So from here, nice percentage gain if you followed your rules and you sold when it had this shooting star top, or sold when it broke this key support, or even lastly here when it broke this. So this is like a trash for treasure trade, and don't let it be your focus. If you're a trader and you're trading one thing, don't be trading Zynga. If you're a trader and you're long 12 things, it could be one of those 12.
Gotcha. And GSV Capital, sellers have been in control of this stock. Where is this one headed for now?
This one was just like one of those things that everyone tried to hype. They said they own all the shares in the deal of Facebook, they own Twitter, they own all this. It's an incubator fund. It was a disaster waiting to happen. And if you got caught in the disaster, next time don't believe the hype. If you didn't get caught and you're looking for a trade now, do it. Make sure you're calculated about it. Take a look here at the chart. You will see there was really not much to it. This is when Facebook was on the way to come out, and then it wound up breaking this level here. I think I heard from everyone, oh, don't sell it. It's going to be higher. Okay. Meanwhile, look where it is. So now it's trying to base out here around $10. Yesterday, with the strength in the social media area, it was a little strong. I do think just for an intraday trade, if we can finally get above 1072 with really, really big value or volume, you get a trade back to 1160 to 12, but I would just use this as a trade, not an investment vehicle.
And Groupon had a nice 2-day move. Does this stock look like it's setting up for a continued move higher?
Groupon came out with a decent earnings report, and because of the environment, they sold it. It was upgraded yesterday. It acted somewhat well. I do think that this has a lot to prove. Another earnings report would help that cause. Down here at this level, you did have a nice clean move. Some that saw this volume and this potent up day on Friday was rewarded by the upgrade. It did break this somewhat of a descending little trend line there. So now it really has to hold above. So if you're in it, I think you could stay in it. If you're looking for an entry, I would say make sure it holds above this 10 area, and then with some type of volume gets above this moving, it can get to 14 or so. This is when it gapped up on the last earnings report and was sold. Now it looks like it's doing a little bit better technically from down here. If it gets above this 1139 and you want to buy it through yesterday's high, just make sure it holds above it so you don't get some kind of push through failure.
All right, let's do some quick hits here. Las Vegas stands still in a descending channel. At what point would sellers find good opportunity to get involved?
You've seen major analysts downgrade Macau's numbers 3 times and it stopped going down. maybe it's discounted enough. Yesterday I bought a little bit as a feeler just to keep it, close by, just in case it does decide to get a little momentum. If you look here at LVS, you will see it's been battered and bruised ever since this high here, ever since it broke, the stop we talked about. You have to have high-level stops in the market. Remember that, 56. So here, it's not great, but I will say that, you have your low in. It's held somewhat higher in the face of what has been lowered numbers a few times, which could have brought it back to the lows. Here is your little area. So I'm long as of yesterday. I think it's an add if it can get above 46.11 and stay above for at least a move back to the 48 zone, and if any kind of momentum comes in, perhaps this moving average gets tested at some point.
And eBay, among the new go-to stocks, just had a strong breakout. Could that breakout be extended?
I think it can, and yesterday was one of those days to love. If you look here on eBay, you will see, pow. Investors that stayed involved during the space above the earnings little gap here were rewarded, and traders who jumped in for the breakout did well.
All right, well, let's just move on to Microsoft. Of course, in the headlines after announcing its first tablet, the Surface tablet, the chart looks bullish too. What do you make of its pattern right now?
If I would stop coughing, I would tell you that it was a nice move off the 200-day. Sperling actually called it out very well. If you look here at the chart, you will see on the 200-day, it was a nice bounceable area, which is good for a target. And now it's making its way back to the moving averages. I would say it'll have a little tough time here, but it's acting better this year. It could be just an investment to hold. Don't chase strength.
And after 4 up days, JP Morgan took a break, sold off. Should investors be worried just yet?
I'm crying. I'm so happy that JP Morgan is finally holding in there. So if you look at JP Morgan yesterday, the banks didn't participate in the move. It was a tech day. Typically after a day or so taking off, it's good to look at the bank, see if any volume comes. Look at JP Morgan here. A bit of a reversal into resistance. Not too much to make of it, but I would say as long as it stays above this 34.07, I do think that it could be in the game for a little bit more of a reflex move. But if it doesn't and starts to fail here, this will let us know that the bounce in the market or the rally that's just started, might be done.
And finally, Caterpillar still below all key moving averages and in a descending channel. So where is the support level it needs to hold in order to gain some momentum to the upside?
This is, again, one of those fallen leaders that people keep trying and trying, and it keeps disappointing. At this point, it could be a barometer that the overseas markets, the world markets, are still in a slowdown. Obviously, we think China is in that camp. So here at this level, I know yesterday guys were pointing out at how weak it was, but the markets ignored it and went to tech. Look here, maybe you get some action. You do see somewhat of a tight pattern. It has been lagging. You have this downtrend right here coming into it in this lower level pivot. If you were short it, I would think you'd probably want to cover if you're looking for a bottom feeder long. If it can get above 87, I think that's a tier 1 entry, but it really has to start clearing this 90 to put some shorts on the run for a potential bounce type move back to the 95 zone. So at this point, it's just a trade. Hopefully you didn't get caught in this downdraft. And it's just, with all the moving averages above it, resistance-wise, it's going to have a tough time. So for now, it's a laggard, but it could be decent for cash flow.
All right, so as we move into today's session, where's your focus heading into trading today?
I want to see if tech continues. I'm long some of it. I want to see if anything else joins the rally. I want to, if you have a new uptrend, what you don't want to do is you don't want to see a distribution day in the first day or so. That's why yesterday was really important that we were down 6-7 handles, that it didn't turn into a disaster, but higher level support held. And you saw a constructive tape. You saw tech lead. You saw a lot of other things mixed, but I think if we could hold in there and keep going up with small incremental days and leaders start to break out and we see some more health, I think you stay with the rally until at least, perhaps the end of this quarter where markups happen, and then we get into the summer months where you'll see volatility again. So the composure always changes. The composure has been to the long side over the course of the past 4 weeks. So don't fight the midterm trends. Stay with them, and then the market will tell us when it's time to change.
All right. Thanks so much, Scott. Happy trading, everyone. Have a great day.